Hi everyone, welcome to the session. This session is all about company accounts. This is one of my viewers' query. So let's get on with the question. Basically, when you get a question like this, what I do is basically I just go through the question and I just look at the examiner's requirement. So what is required by the examiner? So you are given set of information, you are given the trial balance, and also some additional information is also given. So then what I do is I just straight away I just go to the examiner's requirement. So what is required by the examiner? So basically you are required to prepare the following for publication purpose. Comprehensive income statement for the year ended 31st March 2020. Statement of financial position as at 31st March 2020, statement of changes in equity for the year ended 31st March 2020, then notes to the financial statement. So soon after that, what I do is I just prepare the necessary formats, such as the comprehensive income statement, financial position, then changes in equity and notes the financial statement. Okay. So these are the things that first and foremost you need to prepare. Soon after that, what I do is I pick the information from the trial balance and I just fill the relevant section in the financial statements. Okay, so what I do is I just pick all these section from the trial balance and I just fill up the financial statement, which is income statement, financial position, and changes in equity. Okay, so let's do that first. Now let's move on to the additional information section, and we'll try to deal with each and every section separately. Okay, so first of all, let's take the first one. Stock as at 31st March 2020 is how much? You are given 7 million. Okay, so this 7 million has to be recorded in two sections. One is the financial position under current assets, as stocks, and also when you calculate cost of sales, so this is required. Okay, so this should go to the financial position as current assets and also to calculate the cost of sales. So let's look at the cost of sales. So we'll quickly calculate the cost of sales. To calculate the cost of sales, you need opening stock, purchases, carriage inward. So these are the given information. Then you have given land, building, motor vehicles, and other information are not relevant here. Okay, so straight away we'll calculate the cost of sales. So how do you calculate? This is the working number one. This is workings. Okay, so cost of sales. Let's take the opening stock. Opening stock, how much? 18,900. 18,900. Then you need to add purchases. Purchases you are given as 139,050. 050. Then you need to add carriage inward, it's given as 7,050. So 7,050. Then you need to deduct the closing stock. So which is given in the additional information, which is 7,000. Okay. So once you take this total, so cost of sales will be 158,000. Okay. So this should be in the comprehensive income statement. Okay. So because we have taken the opening stock purchases carriage inwards, and this closing stock will reflect in the financial position. So we'll update that section first. Okay. So now let's move on to the format. Okay. So this is the format. So what we can do is we can insert the figures here, the 7,000, and cost of sales, you can take it as 158,000. Okay. So we'll put it in the we'll put it under brackets, because from sales you need to deduct the cost of sales. Okay. So first section we have completed. Now we'll move on to the second part. Okay. So what is the second part? Prepaid insurance 300,000 and accrued electricity 140,000. Okay. So these are prepaid insurance and accrued electricity. I think you are not given separate item-wise expenses. You are not given insurance, and electricities are not given. So what you can do is, as you can see, you are given the main headings like distribution cost, administrative cost, and also you are given other operational costs. Okay. So therefore, what we can do is we can adjust this insurance and accrued electricities under administrative cost. So basically, this is the total administrative cost. So we can go to note number 2. Okay. Under that, this is the first one. Second one is administrative cost. So the total administrative cost is given as it's given as 15,045. 15,045. Okay. So what you need to do is, if you look at the prepaid insurance, if you can see the prepayments 3,795, that those are the prepayments, and accruals 330. So therefore, what you should do is the prepaid insurance has to be added here, 300,000, and accrued electricity 140. This is to be paid. So therefore, you should add back this 140 here. Okay. So thereby your total prepayments will be 4,095, and here it will be 470. Okay. So you need to take these totals in the financial position. This will go to financial position, and since these are prepayments, your expenses should reduce, and these are accrued, and your expenses should increase. So therefore, what we will do, we will deduct 300,000 from here, and we'll add accrued electricity 140. Okay. So thereby this total will be 14,885. Okay. Then these amounts will have to be included in the financial position. So we'll go back to the financial position. We'll just go to the current liabilities, and we can say accrued expenses, since you are given accrued expenses. So this will be 470. And under current assets, we have prepayments we have prepayments. Prepayments will be 4,095. Okay, so these are the two amounts that you need to account. Okay, so this administrative expenses, will just put it here, 40,885. So there will be other adjustments. So therefore, just take it in the first column. So we need to have 3 columns. Okay, and we have taken the prepayments 4,095 and accrued expenses 470. Okay, so with that, the second part is completed. Then we'll move on to the third section, which is actual tax liability. So we need some more space. Okay, now we have dealt with the first one and the second one. So we'll move on to the third section. Actual tax liability for 2018-2019 had been agreed at 2.6 million. Okay, and was fully settled during the current year. Tax liability for the year 2019-2020 has been estimated as 1.5 million. So this is the current period. So this is the previous period. Now let's move on to the trial balance and we'll see. So what are the information given? So you are given the provision for taxation, opening balance, which means this was the previous year provision made, previous year provision. Okay, and tax paid during the period is 3,375. So, but according to this information, 2018-2019, which is for the previous period, had been agreed. So tax is agreed as 2.6 million. So therefore, there is an under provision of tax in the previous period by how much? 2.6 million, which is 575, right? So 575 is under provided. Okay, so we need to make an adjustments to the tax liability. And the last year, and it was fully settled during the current year. So current year, the amount paid was 3,375. In fact, this has to be adjusted in the provision account. And the current year tax liability is estimated as 1.5 million. So this has to be reflected in the comprehensive income statement. Okay, and since this is not paid, this has to be shown as a tax liability. Okay, so let's prepare the necessary accounts here. Let's take the working number 3. So what we can do is we can open up tax provision account. We'll take the opening balance, balance brought forward. It's 2025. This amount was under provided, so therefore we can say 575 credit here, and this should go to income statement under tax. Okay, so if you take the tax expenses that is to be charged to the income statement, this is the tax expenses to be shown in the financial statement, income statement. You can say under provision 575. Okay, so what is the current year tax? Current year tax is 1.5 million. So therefore, you can say tax for the period to be paid 2019-2020. So 1.5 million, and you can say tax 1.5 million. And apart from that, amount paid for the period is 3,375. Okay, so this is the total tax paid. So bank account credit, debit, tax provision accounts, tax paid 3,375. Okay, so if you take the total, $4,100, $4,100. So therefore, 725 should be the balance carried forward in the tax liability account, and income statement, the comprehensive income statement should show a tax amount of 2075. So this will be in the income statement 2,075,000. Okay, so we can update the income statement with 2,075,000, and our balance sheet, our financial position should reflect this 725. So now let's move on to the financial statements, and we'll update the relevant sections. If you go to the financial position, under current liabilities, you can say tax liability. We calculated as 725. Then income statement, you can say taxation. This taxation we have already calculated, 2,075,000. So that part also we have updated now. Let's move on to the part 4. Okay, note number additional information 4. A debtor owing 800,000 is to be written off as bad debts. A provision for bad debt is required to be provided at 10% on the balance outstanding. So this is very straightforward. Okay, so 800 has to be written off as bad debt, and 10% has to be provided as provision. Okay, so if you look at the trial balance, you can see our total receivables, trade receivables given as 13,200,000, and also you can see the provision for doubtful debts 975. Okay, so let's take those two figures and we'll work out. Note number 4. So the trade receivable amount is 13,200,000, and provision for doubtful debt is how much? You are given as 975. Okay, so there was an opening balance 975. Okay, now you need to write off bad debts 800,000. Okay, so therefore what you need to do is our debtors balance will reduce by 800. So the remaining debtor balance will be how much? 400, 11,400. Okay, on this you need to calculate 10% provision. Okay, so when you calculate 10% provision, the provision should be how much? 1,140. Okay, so this provision account should be not 975, it should be 1,140. So if you take the provision account, the balance carried forward balance should be 1,140. So therefore, there is an under provision of bad debts by how much? Okay, so in fact, this should be 12,400. Should be 12,400. So therefore, this should be 1,240. 1,240. So therefore, this amount will be 265. Therefore, the under provision is 265. Okay. So basically, your accounts receivable should reflect as 12,400,000 in the financial position. This will be in the financial position, and this will be reflected in the current liabilities. And this amount will be reflected in the financial position and the current liabilities. And this will be under financial position. This will be deducted from the total receivable of 12,400,000, and net amount will be shown in the financial position, and this should reflect in the income statement, comprehensive income statement, because it's an under provision, and also this bad debts written off also will be shown in the income statement, comprehensive income statement. Okay, so let's move on to the income statement. If you take the distribution expenses, so these will be required to be recorded under distribution expenses. So you have distribution expenses of 11,025,000. So therefore, when you take the distribution expenses, let's say note number 5, distribution expenses. Okay, so you have the total balance of how much? 11,025,000. So to this 11,025,000, you need to add the bad debts of 800 and add under provision of 265. Okay, so let's see whether there are any other adjustments to be made to the distribution expenses. Once it is added, we'll take the total amount to the income statement. Okay, so straight away we can take this 1,240 and accounts receivable 12,400 to the balance sheet, the financial position. So let's move on to the financial position and let's record this 12,400,000 and this provision for doubtful debts. So under current assets, we'll take accounts receivables. Okay, so basically it is 12,400,000 minus 1,240. Okay, so you can do the calculation. So it will be 11,160,000. So lands were revalued at the year end at 25 million. It was decided to reflect this figure in the books. However, no accounting entries have been made in the books in this regard. Okay, so lands were revalued at 25 million. So let's look at the land value, 23,500,000. So therefore, this has to be increased by 1.5 million. So this will be under revaluation reserve account. So this will be in the financial position. And also, you need to update the retained earnings, equity statement. You need to update the equity statement, and also you need to update the property, plant, and equipment under the land. Okay, so these three areas to be updated in the financial position. Okay, so let's go and update the equity statement and property, plant, and equipment. Now, as you can see, the property, plant, and equipment, we have the land value. Let's take the land value. Opening land value is given as 23,500,000. Okay, so this will be the revaluation. This will be the revaluation of 1.5 million. Let's go to the total 1.5 million. At the same time, the equity statement will keep the balances for the time being, opening balances. We can take revaluation of land. So here we have other reserves. We can change it to revaluation reserve 1.5 million, and the total also 1.5 million. Okay, for the time being, we'll update these sections with regard to that note number. Note number 6. This will take some time because this is with regard to this particular note is relating to the note number 7 as well because of the depreciation. Okay, so we'll try to calculate the depreciation based on the information given. On 1st April 2019, motor vehicle for 8,500,000 thousand, and furniture and office equipment for 4 million had been purchased. Okay, so these are additions during 2019-2020. Okay, so whereas you are given the motor vehicle 24,750 as of this date, 31st March. This is the closing balance, 31st March 2020. Okay, 24,750. So this 24,750 includes the opening balance as well as the purchases. This motor vehicle was purchased 2019, 1st April 2019. So therefore, this is a new addition that has to be shown in the property, plant and equipment in the notes to the financials. And also furnitures and office equipment for 4 million also purchased during the period. So you can see furnitures and equipments 21,500,000. So this is the closing balance 31st March 2020. So this consists of opening balance and the additions or purchases during the period. Okay, so even though it is the additions are given, it's a straightforward calculation for the depreciation because this was purchased on 1st April 2019. Our financial year end is 31st March 2020. So therefore, we can depreciate. We have to depreciate. The full depreciation has to be made during the period. So only the notes to the financial, we need to segregate this opening and the additions. In addition, a machinery with a cost of 2 million had been sold at 1,750,000 when its carrying value was 1.5 million. No accounting entry had been entered in the books other than crediting the sales proceeds to sales account. Okay, so there was a machinery with a cost of 2 million. So machinery, you are given 21 million. Okay, so of this 2 million were sold, and this was sold for 1,750,000 when its carrying value was 1.5 million. So what do you mean by carrying value? Carrying value means cost minus accumulated depreciation. Okay, so you have to be very careful. So the carrying value is given as 1.5 million. So which means you are given the machinery cost 21 million, and this is the accumulated depreciation. If you want to calculate the carrying value, so you need to take the cost minus the accumulated depreciation. So that will be the carrying value. Okay, so let's quickly move on to these adjustments. First of all, we'll take the I think motor vehicle, there is no adjustment required. This is for the presentation purpose. They have given the breakdowns. Let's take the machinery account and the machinery accumulated depreciation account. Note number 6. Let's take the machinery account. And machinery accumulated depreciation account. So machinery account, according to the trial balance, it's 21,000 and here 4,500. So 21,000, 4,500. So these are the balance, opening balances. Sorry, the closing balances. We'll take the closing balances. Now, what it says is, in addition, machinery worth cost 2 million had been sold. So therefore, we'll have to open a disposal account. We'll open a disposal account at the same time to calculate the profit. So this is the disposal account. The 2 million had been sold. So therefore, this will be transferred to the disposal account, 2 million. This is the machinery. Okay. Now, to calculate the carrying value, you need to transfer it from the accumulated depreciation. Now, the carrying value was 1.5 million. This is not the accumulated depreciation. You have to be very careful. Okay. You are given the carrying value of this 2 million, which means the cost was, how do you calculate the carrying value? Cost minus accumulated depreciation. Here the cost is 2 million, but accumulated depreciation is not given. Carrying value is given as 1,500,000. So therefore, what should be your accumulated depreciation? It should be 500. Okay. So this has to be removed from the accumulated depreciation account, not 1.5 million. So if you remove 1.5 million, which is wrong, that is the accumulated carrying value. So accumulated depreciation relating to this 2 million is 500,000. So this has to be transferred to the disposal account, 500. This is accumulated depreciation. Okay. Now the remaining amount is for how much it was sold, 1,750,000. So when you this has been sold at 1,750,000. So this amount where it has been credited. So when you receive 1.7 million, 1,750,000, 1,700,000. When you receive this cash, 1,750,000. So this will be debited to the bank account and it has to be credited to the disposal account to calculate the profit. So however, they have credited these sales proceeds to the sales account. So therefore, this adjustment has to be made to the sales account. The sales account is overstated by 1,750,000. So this amount has to be deducted from the sales. And to rectify this, you have to debit the sales account and credit the disposal account. Okay. So from the sales account, 1,750,000. So when you take this total, so machinery amount will be how much now? So 21 minus 2,000. So it will be the balance carried forward in this account is 19 million. So on this 19 million, the depreciation amount will be how much? The plant you are given 25%. So we can take 25% on this, which is 4,750,000. Okay. So next one is, let's take the buildings. So building cost is how much? 37,500,000, 5% depreciation. So 37,500,000, 5% depreciation. So that will be 1,875,000. Then let's take the motor vehicles. Motor vehicles, you can see 24,750,000. So as I explained you can calculate the full depreciation since the purchases were done in the beginning of the year. So motor vehicle is 20% depreciation. So 20% on 24,750,000. So that will be 4,950,000. Then finally, we have furnitures and equipments, furnitures and fittings. We have how much? 21,500,000. 21,500,000. That also will be depreciated at 20%. So that will be 4,300,000. So when you take the total depreciation will be 4,750, 1,875 plus 4,950 plus 4,300,000, 15,875,000. Okay, so of these the depreciations, okay, motor vehicle should be reflected under distribution expenses, and the remaining, the machinery, buildings, and furniture and fixtures should be reflected under administrative expenses, administration cost. So therefore, when you take the distribution cost, you can add here motor vehicle depreciation. How much is that? 4,950. And also we had administrative expenses. So you can add the depreciation part, which is 4,750 plus 1,875 plus 4,300, which is for furniture and fixtures. So that total has to be added. So that will be 4,750 plus 1,875 plus 4,300, 10,925. So thereby your total administrative cost will be how much? 25,810. Okay, and your distribution cost will be how much? 11,025 plus 800 plus 265 plus 4,950. So that will be 17,040. So this should be in the comprehensive income statement. This also should be in the comprehensive income statement. And this has to be adjusted in the financial position and the notes to the financials, which is the property, plant, and equipment. So let's go and update those sections. So here you can take the administrative cost, administration cost as 25,810, and the distribution cost 17,040. Then if you take the property, plant, and equipment, we had the land. Building cost is how much? 37,500,000. Motor vehicles, we had a balance of 24,750, and during the year addition is 8,500,000. So therefore the opening balance will be 16,250,000, and we can show here additions. Under additions, we can say 8,500,000. So thereby the total amount will be 20,750,000. In the plant, we had a balance of 21 million, and there was a disposal. We need to show the disposal here. Disposal of 2 million. So if you take the total, it will be 19 million. Okay. In the furnitures, we had an opening balance of 21,500,000, whereas this consists of 4 million new additions. Under 4 million, we can put the new additions. So therefore, the opening balance should be 17,500,000. So thereby, this total will be 21,500,000, which is exactly reflected in the trial balance. Okay, so these are the totals. If you take the total balance, it will be 115,750,000, 1.5 million, and let's take the totals. This will be 12,500,000, and this will be 2 million. Okay, so let's take the total also here. This total will be 25 million, and this total will be 37,500. Okay, so let's take the opening balances of the depreciation. The land, there is no depreciation. Building 9,375,000. Then we have motor vehicles 5,700,000. Then plant 4,500,000. Then furnitures and fixtures 6,750,000. Okay, so that total given the trial balance 26,325. Then we calculated the depreciation for the year. Depreciation we calculated. So we calculated building depreciation as 1,875,000. Then we calculated motor vehicle 4,950,000. Then plant 4,750,000. Then 4,300,000 for furnitures and fittings. Okay, so that total is 15,875,000. Okay, this we have already accounted in the distribution expenses and administration expenses. So then we had disposal of machinery. We removed 500,000 to calculate the disposal profit. Then, so these are the totals. So when you take the totals, okay, so these are the totals. Then your balance, sorry, this should be the top balance as at 31st March 2020. This is not 21, this is 20, sorry. Then this is the balance as at 31st March 2020. So what is the carrying value? Carrying value will be cost minus depreciation. So therefore, the total carrying value will be how much? To take the total, 86,050,000 should be reflected in the financial position. Okay, so this should be the balance should be reflected in the property, plant and equipment, which is 86,050,000. Okay, so 86,050,000 should be reflected in the financial position, 86,050,000. So we have recorded, this is for the presentation purpose, so you can put it under, should be under notes to the financials. Okay, so this one in the financial position. Okay, now let's move on to the next section. During the year, 500,000 ordinary shares had been issued at 12 each and proceeds had been credited to stated capital. So which means 500,000 times 12. Okay, so which will be 6 million. Okay, has been issued during the period. Okay, so this is credited to the stated capital. So this is also another presentation. As you can see, stated capital is 71,650,000. This is the balance as of 31st March 2020. The opening balance will be 71,650 minus 6 million. So that will be the opening balance of the stated capital. So that will be 65,650,000. Okay, this can be reflected in the what do you call equity statement. So straight away what we can do is we can show this amount in the equity statement separately as opening balance and capital issued during the period. We can take the general reserves, revaluation reserves, opening balance, and also we have the retained profits. So let's move on to that section. So opening stated capital is 65,650,000. So we can say ordinary shares issued, will be 6 million. Then we had general reserves 8,250,000. revaluation 6,750,000 opening balance. Then we had a retained profit of 8,475,000. So this will be the total. We'll take the totals here. Ordinary shares issued also we have taken. Then we need to identify the profit for the year. We should identify the profit for the year. Okay. Again, let's move on to the, so this one we have already accounted now. The rest of the information, let's go through quickly. A customer had filed a legal action against the company claiming damages of 6,500,000 for its failure to deliver the goods as agreed. The likely outcome of the case cannot be estimated reliably as the case is still at the preliminary stage. So therefore, the 6,500,000 will not be adjusted. This will be under notes to the financials. Okay. Then 18% bank loan is settled by half-yearly installment of 2 million, along with the interest accrued on the outstanding capital balance. First half-year installment with the interest was paid on 15th October 2019, and the second half-year installment with interest was paid on 10th April 2020. Okay, so if you see how much is the loan capital, the bank loan is 21 million. You need to calculate interest at the rate of 18%. Okay, so this 21 million is given on 31st March 2020 closing balance. Okay, and it says 18% bank loan is settled by half yearly installment of 2 million, along with the interest accrued on the outstanding capital balance. So if you calculate half yearly interest, so by taking this amount 21 million, so it is basically half yearly interest means our financial starting from 1st April 2019 till 31st March 2020. Okay, so half yearly means 6 months, 6 months. Okay, so you are given the balance loan amount as 21 million. Okay, so this half yearly interest installment was 2 million settled here on which date? 15th October. So which means this was settled on 15th October 2019. Okay, so April, if you take 6 months, April, May, June, July, August, September. Okay, so this should be 30th September, but settlement was made on 15th October, 2 million. Okay, so before settlement, your loan amount should be 23 million. If you calculate 18% on this for 6 months, so that will be how much? 23 million times 18% divided by 12 times 6, 2,070,000. Okay, so 2,070,000, if you go to the trial balance, you can see you are given interest payment as 2,070,000. So this is the interest amount for the first 6 months. Now, second 6 months interest is not accounted for. So therefore, what you need to do is you just take 21 million. So this amount was settled on 2 million. On 21 million, you calculate interest amount 18% at the rate of 18% for 6 months. So that amount will be 1,890,000. Okay, this amount was not paid. This is not paid, but this amount was paid. Okay, so therefore, the total income that should be reflected in the income statement should be 2,070,000 plus 1,890,000. Okay, so that amount will be 3,960,000. And this amount should be reflected in the financial position as a liability. Okay, so let's go and update that section. So under finance cost, we can take 3,960,000. Then under liabilities, under current liabilities, interest payable, 1,890,000. Then bank loan, you can show the total bank loan is 21 million. So that you can show it here, 21 million. The following resolutions were passed at the directors meeting held on 20th June 2020. Okay, so what were the resolutions passed? To transfer 1.8 million to general reserve and to declare dividend of 1.5 per share on ordinary shares. So this is the declaration made on 20th June 2020. The financial statements were authorized for publication on 30th July 2020. Of these two items, this will be adjusted in the equity statement. And since this is a declaration, this will be shown on the notes to the financials. Okay, so therefore, let's move on to the sections. Under equity statement, you can say transfer to general reserves, 1,800,000. So this will be transferred from retained profit to general reserve. So you need to deduct it from retained profit and you add it to the general reserve. The total will be zero impact. Now we need to calculate the profit for the year. So let's calculate the profit. Now sales figure we calculated as how much? Now the total sales was 235,125,000. 235,125. From that we need to deduct that sales proceeds 1,750,000, which is received from sale of machineries. So therefore you are correct. Sales value should be 233,375,000. Then your gross profit is how much? Your gross profit is 75,375,000. And let's go through the trial balance now one by one. Sales, opening stock purchases, cost of sales we have taken, land, building, machinery, furniture, and fittings, accumulated depreciation, trade receivables and payables, distribution cost we have taken, administrative cost we have taken, other operational cost. So other operational cost is 3,130. Interest cost also we have taken. Bank charges has to be accounted, bank overdraft, interest also should be accounted. Then we have other operational income 225, other operational income 225, other investments, dividend on investments 480. So we have other income from trial balance. If you look at the trial balance, there are two items. we have dividend income and other operating income. As you can see, 225 plus dividend income of 480 plus we had a disposal income of 265. So therefore, other income total will be 970. Okay. Then distribution cost, administrative cost we have already taken. Then other cost we have 3130 plus. If you look at the trial balance, we have bank charges 2175. Okay, 2175. So that will be 5,305. The finance cost we calculated 3,960. In addition to that, there is a bank overdraft interest of 825. So that we will add 825. So that will be 4,785. So therefore, the total expenses will be how much? 52,940. So this has to be deducted. So we'll take it as minus figure 92,940, 52,940. So net profit before taxation will be how much? Gross profit plus other income minus 52,940. So that will be 23 million. So there's a small adjustment. This profit on disposal should be 250. So therefore, this should be 955. So net profit should be 23,390,000. Then your taxation is 2,075,000. So therefore, your profit should be 21,315,000. So this is the amount that you should take it under equity statement, 21,315. Okay, so then your total retained earnings will be how much? So stated capital should be 71,650. 71,650. Your general reserve should be 10,050,000 in the financial position. And revaluation reserve should be how much? 8,250,000. And retained profit should be 27,990. So let's see whether there are any other adjustments to be made. From the trial balance, we have taken other operational cost. We have taken other operational cost, interest payments considered, bank charges, bank overdraft interest also considered, interim dividend. So this has to be adjusted in the equity statement. Provision for taxation adjusted, tax payment adjusted, other operational income adjusted, other investment should be taken in the financial position, dividend income is considered, provision for doubtful debts adjusted, prepayments adjusted, cash in hand and bank overdraft has to be adjusted in the financial position. So now in the equity statement, let's take dividend payment. Okay, so in the equity statement, so what we can do is we can show dividend paid 3 million. This is the interim dividend payment. So therefore, your adjusted retained profit should be 24,990,000. 24,990,000. So that will be how much? When you take the total, that amount should be 114,490,000. Then let's take the other figures. So there is an investment of how much? We had an investment of 29,010,000. 29,010,000. So therefore, total non-current assets will be how much? 150,060,000. We have stocks 4,090,000 prepayments, accounts receivable 11,160,000. We have cash and cash equivalents how much? If you add up these two totals, 10,530,000, 10,530,000. And under current liabilities, we have bank overdraft, bank OD balance of 570. 570 is there. Then what else? We have trade payables 8,250,000. Trade payables 8,250,000. That has to be added. So that total will be how much? 11,905,000. Your total bank loan is 21,114,940. And what is the current assets total? Let's take the current assets totals, 32,785. So when you take the totals, basically if you take the totals of total assets, so that will be how much? 150,060,000 plus 32,785, it will be 147,845. So this is the total assets. Let's take the total equity and liabilities, 114,940, bank loan 21 million and 11,905,000. As you can see, the total is 114,845,000. So this is the financial position. This is the net profit, 21,315,000. And we just prepared the statement of changes in equity and also property, plant and equipment under the notes to the financials. So you need to complete other notes to the accounts, like you can show the breakdown of cost of sales, and also you can show the other income. How did you derive at this figure? And apart from that, you can show the breakdown of other expenses, which is 5,305,000. And also you can show the finance cost under those the financials. Then you can show the breakdown of the taxation, and also I have given the property, plant and equipment notes. That is also part of the notes to the financials. Then there are two notes that we need to include, which is relating to revaluation of land, 25 million. And also there's a legal case. There's a legal case against customer had filed a legal action against the company. So that should be shown as a notes to the financial, and also the dividend declaration of 1.5 per share has to be included. Okay. So with this, I will conclude the session. If you have any questions, please comment below. So I'll see you soon. Thanks for watching.